trade, live execution, gold futures, April 2025 contracts. Today is January 4th, 2025. We're already in a trade. We're looking to target these highs where external liquidity is resting. Our stop loss is below the most recent swing low before this move upwards. We're bouncing off this 1 minute BISI. We're actually in between 2 minutes, two cities over here. So this basically turning into a 1 minute inverse fair value gap. We're waiting for this one to be inverted as well to continue the rally up, taking out buy side liquidity resting above these highs. The reason for this trade is, why are we going long? Go back to the 15-minute chart, show you here. Earlier today, this was the Asia session, this is the London session. Earlier today, London session, between London and Asia session, price sweeps below previous day low, which is this swing low over here, represented by this dotted line. That's our previous day low, that is Monday's low. We sweep that, take out sell side liquidity resting below these lows, and then price displaces up to the upside on the 15-minute chart. It forms this 15-minute bullish fair value gap or 15-minute BISI, and based on that, and then trades back into it as the 2022 ICT 2022 mentorship dictates or teaches. Price should trade back into the 15-minute bullish fair value gap and then rally to the upside, or let's say if we're going short, then it will plunge down. And this is exactly what happened on the 15-minute. We waited for a rejection represented by this bullish candle here above the consequent encroachment, which is represented by this red line, which is the midway point of the 15-minute BISI. And then we jump onto the 1 minute chart for our entry, and then on the 1 minute we looked for pretty much this displacement, and in this case we're using this inverse 1 minute IFVG, 1 minute fair value gap basically. And now we are in 4 contracts. We will take 3 contracts off at this level and keep a runner to see if it hits these highs or possibly even these highs over here. What we want to see right now is basically this 1 minute SIBI to be inverted, making it a 1 minute inverse fair value gap. Just to add basically confirmation and further to our conviction. What we're going to do now, we're going to move our stop loss lower, move our stop loss higher, decreasing our, minimizing our risk. And we're taking this swing high. See, this 1 minute closed above this 1 minute bullish candle closes above the 1 minute SIBI. What I would like to see is a retracement into this 1 minute SIBI, and then an impulsive move to the upside. We're at $400 plus. What I want to do right now is, I don't expect price to go down below these lows. So I'm going to keep my stop loss right over here. Just want to bring your attention to this 1 minute BISI over here. Boom. I'm going to move my stop loss to break even as we are taking out 3 contracts. See, now this will probably come down and then retest this 1 minute SIBI, and then before continuing the rally to the upside. This here is a 1 minute BISI which was tested over here on the way up, this big move up, and then comes down, disrespects it here, and now it's suspecting it again, making a move to the upside with no retracement. This for me right now is a 1 minute, has been inverted to a 1 minute inversion fair value gap or inverse fair value gap, just like this one over here. We are done with this one here. I don't think we're going to need it anymore, but we're going to keep it here just for the sake of clarity for this video. So basically the concept is price, or the algorithm of price, it looks for 2 things in the market. It looks for internal range liquidity and external range liquidity. Now, the internal range liquidity over here is our 15-minute bullish fair value gap. Price takes out buy-side liquidity first on the 15 minutes, I want to go back to the 15-minute while we're at it, where we have a runner. I think I just may have accidentally taken out my trade. Oh, actually, we're hit. Our stop loss, our take profit was hit nicely, but let me go back. That was a quick move. Just as I mentioned earlier, it was an impulsive move. This here was our most recent liquidity sweep. So basically what price did, it went up on the 15-minute chart. That's where I start every single day. 15-minute chart sweeps buy-side liquidity resting above these highs and these highs and these highs, okay? And then price forms this 15-minute bullish fair value gap. After this 1, 2, 3 candles, these are the candles that form the 15-minute bullish fair value gap. This black candle tests, retraces back into this 15-minute fair value gap, tests it, closes above the consequent encroachment, showing clear sign the price is still willing to go higher. And after taking out external range liquidity resting above here, goes out to take out internal range liquidity, and then goes out to take what? Again, external range liquidity resting above these highs, making this, after this sweep, our new buy-side liquidity, which has been swept within our trade, which we had just taken moments ago. I hope this is clear. If it's not, please do leave your questions and comments in the comment section. And for those of you who wanna know my checklist, my setup checklist, what I do exactly, what are the steps, what are the boxes that I need to check before I go into a trade, or for me to take a trade, whether bullish or bearish, you could comment checklist on my YouTube channel, and I will be gladly to send you the PDF. Hope you find this useful. Till next time, take care.